The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this 28th, Friday, the 28th of March, and 2 days to go, and then we wrap up the month, 2 market days to go, then we wrap up the month, and look at that candle. Last night, that was at a Chapman Roman candle, where the body of the candle was halfway or a little bit more than halfway from the low, the long wick at the bottom. Now we're filling it up. And look at the S&P, the same thing. So the Dow's down 317 at 41,979. The only thing we've got left now in the shorter term is that we still have the short position, small short position in the Dow. Now let's go to the S&P, where we have a short position. But it's down 43 at 56.50, and look at this candle filling in the whole candle. We'll see what happens by Monday, because that's not great. That's the monthly candle with a doji high. Makes me a little nervous. And here's the Chapman inside track in the S&P. It worked very nicely as a bounce, but it didn't even hit the pink 9-period moving average, and it's pulling back. It hasn't broken down yet. But this is not great action because the stochastic's at 73%. If it was 83% pulling back, I say that's okay. We've still got internal strength. Right now, we have to look at it negatively. I'm going to go through a bunch of things, and I'm going to say the candle of March at 4 o'clock on Monday in each of these different ETFs or indexes or key stocks, it's going to be really important for the outlook in April. Now, I considered that there was a chance that in March we had what I called an internal low right here using the Chapman wave. Let's see, this is the Chapman wave. Okay. Dark news index. And I said that could be an internal low, and I'm suspecting that we're going to arch over. And then we're going to have to see what happens, where we stop to get a residual low. It's like an earthquake that has an earthquake, and then you have the aftershock, and that could sometimes be very much less. Could be had the same, and it could even be greater than the earthquake. And that's why I look at it. These are all internal highs, residual highs, internal low, residual low. We've only made an internal low, and I suspect that we're looking at something in this, the proximity just in chart concept was the same thing that happened back in early August of 2024 when you had a low in the Dow and you spiraled up and then you arched over and then you had an internal low and a residual low higher up. I think this is going to be different. I think that there's a chance that this low right here, the low of the 21st of March of 41,433, that's going to be the big test. Do we hold before then or do we not? This is options expiration day, triple witching actually. So the day is young, anything can happen. But we have been raising cash. There are a lot of stocks that are looking very interesting in other areas. And that's the whole thing, that this is a rotational sector market. And you've got to try your best to identify it. So let's go on. IWM is now down. IWM, did I type? Oh, I typed it in the wrong chart. I always do that. IWM, there it goes. Russell 2000 down 2.36 at 202.21. Just one I'm thinking of it. You remember S&P and Russell, and I said sometime this year there should be a strong rally in the Russell. We've not really had that. In fact, I shouldn't say we've not really had. We've not had it, and that's the same correlation to the XLF, which is down today, down only 47 cents at 49.72 in this up channel. That's the S&P Select Financial Spider Fund that has the money center banks mostly. It also has Berkshire Hathaway, but mostly, and some of the, it has Visa. But look at this, KRE, Regional Bank Index, down 85 cents at 56.67, arching over from the 200-period moving average. You couldn't hold above it other than once in the last 6 days, that's not a good sign. So that 200 period moving average is going to be a big test of strength. That's in the weekly chart at 55. Now, this is going to be very interesting. Look, I mentioned the KRE because it's S&P and the Russell 2000. I had formulated an idea that said we should have the S&P regional bank ETF, the XLF, the biggies. I see the smallies start to rally at some point in 2025. Well, so far that's not the case. So that's the same relationship of S&P big, IWM 2000 smaller caps, and you've got the XLF big caps, and the KRE, the smaller caps. They're not really that small, but they're smaller caps. Okay, so now let's go on to gold. So gold is having a nice move up. It's up 27 right now. Leg D finally made that leg D. Remember, I was talking about this the other day. I said, Chapman wave methodology, all the technicals are strong. They absolutely should be a D. That's the prerequisite for a buy mode most of the time, almost I'd say 90-something% of the time. Now look at this. This is a D in the weekly and a D in the monthly. You got triple Ds. Remember triple D? Triple D is also 3D Systems Corporation down at the lows of 208. Wow. Okay, let's go on to silver. No, we'll go GDX. I had a question. Could you do the GDX and the HUI? The GDX right now, leg D, there's that double top peak, C1, C2. I said, it should still go to a D. It's gone to a D. So that's very interesting. So for subscribers, we've remained along the PHYS. I could have gone into the IAU. Instead of this, but this one, Sprott physical gold units, leg E in the monthly chart, leg D in the weekly chart, just made that leg D in the daily chart. It does the job very nicely. Is it IAU? Yeah, you see the IAU, got to renotate it yet again. A, B, that's only A, B, C, D. Yeah, that's in D as well. But I quite happy with the Sprott. And this is trading at 58, and the PHYS is trading down in the 20s, 23.83. So I just thought bang for the buck, better use of the money. Okay, within that context, there's in the DEN HMY, yeah, that's Harmony. That's a South African gold. I believe it was actually near where I grew up just as a teenager. Harmony Gold back in South Africa on the Vaal Reef. I lived just a little bit out near Johannesburg, maybe 20-something miles away. Okay, so we're looking at 14.12 on Harmony, up 10.15, up $1.29, big breakout to the upside. And I have to call this just a leg B in the weekly chart, a leg G/C in the monthly. All right, let's go to the GDX. As I said, GDX, very nice, big move up 65 cents at 46.40, leg D. Harmony, HUI dot X. Oh no, did I just do something silly? Is that the one that I'm not getting, HUI? Oh, why am I not getting HUI? HUI dot X. All right, I don't know what happened. I'm not getting the HUI. That's a gold and silver ETF. I'll be back in a moment. Dow's down 383. S&P's down 56. Tough session so far today. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
So, yeah, this is the evening. Look at that sharp move. And they had this arch formation going to a peak D in the 10-minute chart from about 5 o'clock this morning. And then it took it out, left side, right side price, time match symmetry. And then, whoops, it took it out to almost to the bar. And now we're down look at this. This is still a D going all the way down. It's down 62 at 56.75. So there's a bunch of things that I want to go through right now, questions that were asked. So let's just do that. So we've got, I must have lost it. Maybe they don't have it anymore at TradeStation. I had this all notated, so I don't know what went wrong. For the HUI, that was the gold silver fund. Let's go to, so I want you to just go to this because I think it's very important. Excuse me. I've been talking about Robinhood for some time. Actually, for a year and a half at least, maybe more. It had a spectacular move from the low that was made back in, let me see if I can get there, back August the 4th, or August the 5th. It made a low of 13.98. We've been waiting to add to our IAI, which is the ETF for the broker-dealer. That's the ETF. And we've had that since 2020. I think it was March of 2020. And I keep saying we want to add some kind of a broker, but I don't want to add to the IAI. I want to go to a specific broker, and I chose Robinhood. Got it very nicely in the 16s on the very next day after the 13.98 low. We've had some real nice, taken a little bit off, and the last little bit off that we took off that core position was the day that it spiked. That's the day that I was actually leaving for, I remember being at the airport on my way to Sydney, Australia. And that was when it spiked to 66.91. And we got out, it could have been higher, but I said that we got out that one because that's what I saw, 62. And then we waited. We've had other positions, and the last position was at 38, and it ran all the way to 49.88. Took a little bit off, and then it pulled back. We've got that core position, but we had two other trading, very short-term, added small positions to that, taken out. So this is the first, I'd say this, maybe we've had 3 or 4 tiny losses with Hood and really good gains. I'm now concerned about Robinhood. One of the reasons is that in their on the fundamental side, as I'm looking at it, I'm beginning to think that I don't want to overstay our welcome from the core position in the 16s. So I'm going to be doing something with that. And as far as trading positions are concerned, I think I'm going to hold off for now because as I see it, I think that it's under pressure now. There's pressure. Tommy in his show, the morning market kickoff this morning, got to it, and he was talking about it. And I kind of agree that there's a lot going on, and it's almost like show me. Now it's the point where instead of buy me, it is all right. Now let's see what happens. So I think at this point, I'm going to do an assessment this weekend. I'll be doing my market overview for my subscribers. Remember, it's almost like a video. It's almost like when I say, it's almost like a webinar that I give every week discussing the market, the conditions, the parameters, the Chapman wave methodology we're using, what we've done, how we've done it, and what we're looking for, what's worked, what we want to continue for the next week, etc. There's a lot going on. You've got a lot of changes. Look at this. CL, this is Colgate-Palmolive, has a real nice bounce over the 200-period moving average as it took 100.18 high just about 3-4 weeks ago, dived down to the 89 area, and now it's bouncing. Procter & Gamble, so it's in certain areas. But wait a minute, aren't these going to be also inflationary areas? So I'm doing a deep dive into what I think is starting to work away from certain sectors that have been real favorites. For instance, SMHs, not favorites anymore. Look at that. Arch, this is the dreaded H pattern. Let me show you the pattern. This we'll be discussing in my overview. So you could listen to my market overviews, my hour long. Sometimes it's more. Lately, it's been an hour and a half. As I say, it's like a webinar. And you can listen by becoming a subscriber to the Opening Call daily newsletter. And besides the techniques you can see in live trading every day, we're doing something that at this particular point, especially based on the monthly chart, look at this monthly candle with a dreaded H pattern. The H pattern is this. So years and years ago, I said, sometimes the market comes straight down and then it bounces and then it fails. And if it takes out that left side low, this is way back when I was started here at TFNN in 2002, was unofficial. 2003 is when I started my newsletter. And gold was soaring from the 2019, late 1999, 2000 XAU. Oh, that's what it was. XAU, I'll go to it in a minute. XAU low in the 44s. And it ran up. And then I'd said in the monthly chart that I think the South African gold stock, why am I just forgetting at this particular moment? It had made a peak D in the monthly chart, and it could come down, and it came down, then it did the arch formation, and then took it out on the left side. Oh, I said, that's a dreaded H. It's usually an H pattern, but when it takes it out sharply, you can go 1-to-1 from the arch high to a measured move to the downside. So we started calling it the dreaded H. There's a technique involved. Well, here's your dreaded H. If the SMH is any time in April, I'll call it on a weekly basis, because look, this is the micro, the daily. Look at the monthly. Look at the weekly and then look at the monthly. That's a dreaded H right there. And if we start to trade, 200.49 was the low in August of 2024. If we trade in the 194 area, that is going to be very painful to the SMHs. All right? So with that said, so there are a bunch of things that even now, the SOXS has to be on your radar. Where did I type it? SOXS. Has to be on your radar, because look how it's rallying up to the 200-period moving average, 1.44 at 27.71. And the weekly chart, look, the weekly chart is starting to strengthen. So I'm going to be watching how this unfolds over the next few days. And today I'll be discussing it in pretty much detail, like a webinar. So you can become a subscriber, you get my newsletter, or you can just get it for this and say, hey, I'm done. After 28 days, you just say, I'm done. Don't like it, or I like it, but it's just not my style. That's fine. So I'm just suggesting that it's not a bad idea at this particular point. We're on the cusp. And the monthly chart is telling me whether or not we're on the cusp. So we'll be looking at it in great detail. So with that said, I said that what did I say was at 44? That was the GDS. So as I'm looking at this right now, the Dow is down 440. Ugly session. And this is where you wish that you had even more short coverage. But anyway, and as I say, Hode is something now I'm looking at with great skepticism on the shorter term. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour. Lots to discuss.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. I'm going to show you this chart right now. You see this chart? This is a chart that has a 75.43 high on the 20th of March. It drops sharply to the 71s back at about the 10th, 11th of March. And then it rallies peak A and peak B, and even rallied yesterday. And even today, it's only down 5 cents, 0.07 at 74.02. Look at this cup formation with a perfect double top, 75.14. The week of the 29th of November of last year, comes down to the 68, 70 area, 69 area, then rallies back to where? 75.43 on the week of the 10th of March, 2025. And look how the 9-period moving average is holding so nicely. Look at this monthly chart. Look at this candle. Not bad, huh? Wait a minute, what is this? This is the S&P 500 low volatility fund. Low volatility, you would think low volatility? We're having high volatility. This thing should be, this should be jumping. Hey, low volatility. So they've made it a fund of the 500 in the S&P that I'm not sure quite what the measurement is, how it's worked. But look at this. The 9-period moving average in the day actually crossed positive yesterday. It's holding today. It's at 53% in the stochastic. Not bad. So if you have to be in the market, maybe the S&P 500 Low Volatility Fund, SPLV, is the place to be if you're forced to be in the market and you just want to, you don't mind going down as long as it's not going down the same percentages as the others. That's something to monitor at least. So I'm just fascinated by this. I've been talking about it for a couple of weeks now, saying, look at that. But this is really interesting. The Day's Young is down 5 cents, and the S&P itself is down 77. This is down 77. That's 1.4%. This is down 0.09%. It'll probably get worse over the day. We'll see. Okay, here's the other thing that I want to look at. A question, just let me get to this. So the VIX index, now this is different. You see the way the VIX index has been making higher highs and higher lows, and I've been saying, watch this 200-period moving average because it's testing it, but it's at a higher level. And that just says to me that fund managers or whoever it is, the big money that's buying protection has been buying protection. And even though the market has had good bounces, this is still higher than it was at that 14.74 low of the 14th of February. So this is, and look at the weekly chart. Now, when the market drops as severely as it is now, Dow is now down almost 500 points, S&P is down 80. This is a pretty serious pullback, right? When the market pulls back and the volatility index kind of has ignored it for a little while, that's when I take it seriously. On those other spikes, like on the 27th of January when it spiked up to 22.51, all those news events that were just the one-offs, and then you came down, that's something else. I always say that if the market is making highs and the VIX index suddenly takes off, usually that's not the low. The low comes when you're already quite handsomely down. I don't know if handsomely would be the word. You are quite significantly lower, and then the VIX wakes up. That gives the VIX, look, for the VIX to get back to even not the 29.57 high of the 11th of March, but let's just say even to the 24, 25 level, this market probably has a long way to go. So now I'm looking at this and I'm saying, within the context of the volatility index, this volatility index is saying, hey, mister, you've been cautious up to now. You've had some nice trading positions, and you've raised cash, and you have some shorts. That might not be good enough at this particular point. You might have to raise more cash and look more at the short side. And we'll see what happens. We've got Friday today, the close options expiration. It could double by the end of the day. Down instead of 500 could be 1,000, or you could get one of those vicious turnarounds. I'm not sure yet right now, other than a purely technical oversold bounce, why there would be a sudden turnaround to the upside of more than maybe 150 to 250 points, because this is broader now, and the uncertainty is, I mean, when you think about it, in the in the Tiger YouTube, a number of people have been writing, and one was talking about, let me see if I can just lean over and get it to assess the possibility. Oh, the financial, yeah. Jeff and the Tiger YouTube, Basil, you need to assess the possibility of a real collapse of the financial markets. We are banana republic right now. I was going to say something else, not to that point, but to the point that now you've got the promises. So when there's a buyback, if a company says we're buying back, they have the earnings report. Sometimes the earnings report is not that great, but they say, we're buying back $2 billion worth of shares. It isn't the next day. And sometimes it can take, they're just saying we're buying it back. They're not saying they're buying back in the next week. So they don't even have to necessarily always put that money to work. So now you've got this same situation in the auto industry. And you can see that now. Look, here's General Motors. Look at that, down another $1.31, went to a peak D in the 53s. Here it is trading at 45, not a big deal just yet, but the 200-period moving average of 42, take that out. That's serious. Look at Ford. Ford was holding really nicely the other day, yesterday. It was in the, I think it hit 1040, is that correct? No. 1040, yeah, 1040. And now it's trading at 966. That's down 24 cents, 2.47, and you can just go on and on. So now you've got the companies all around the world say, oh, yeah, we're going to build factories, we're going to do plants, we're opening up this, we're opening that. Once again, that's not the next day. That's a work in progress. And not all of them might fulfill what they're only saying this, of course, as a tariff, the liaison between higher tariffs and slightly lower tariffs, and promising this is something that we're going to watch closely. But in the meantime, back at the ranch, this is very important. Look at this. This is interesting. RYCEF, I believe it is. Yeah, look at this. Rolls-Royce. Almost at all-time highs. But that's engines, airplane engines. I was asked to look at race, which is Ferrari. Look at that. Going from the 512-ish area, it's now trading at 432. This is serious. Look at the FXI. Trading down as well. I'll be right back. Basil Chapman, Dow's down.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So the FXI is down 82 cents at 35.85. Look, we made that peak, double top 38.73 times 2 sessions in a row to the 19th of March. Gaps down, and now it's trading at 35.08. And I think that, and the 9-period moving average, the day is young, but at this moment it's just flipped negative to an S, meaning sell or short. And this is just the one indicator I'm saying. But the MACD's down, relative strength's down, stochastic down at 21%. That's really weak. And the on-balance volume's down. Monthly chart did a kind of a double top-ish from 37.50 to 36.13, but it hasn't closed above the 37.50. Yes, it did once. So this is going to be something to watch. That's the iShares China Large Cap ETF. And let's go to the one that we often look at here, XPEV, which is Xpeng. Designs, develops, manufactures smart EVs. Haven't sneezed in a session for a little while. 19.59 down 61. That peak F that I said looked to me like it was at least a short-term top right there at 27.16. And now we're trading at 19.7, 27.16. Yeah. So that's something to consider as a sell mode in the daily. I haven't yet got to a sell signal in the weekly, and the monthly chart, of course, did spiral. It's not a very pretty candle. Next question I have. Okay, so questions came in. So could you look at Amazon? Amazon, here we go. No, I haven't finished. I can't go to Amazon's making the dreaded H pattern. Let's just go. I didn't finish those. I want to go back. High-grade copper had a nice spike to a peak D. I said, we've got to watch that closely. And there it is. Peak D at about 5.37. Trading now down still nicely above the 9-period moving average, and the 9 is over the 14. We're going to be watching copper very closely. But the hint was that SCCO, Southern Copper, took a dive before that peak D, and now it's down 75 cents at 96.09 after hitting the 103 level. Watching that very closely. Next, so I want you to do that. GDX, China. Okay, now we want you to look at, I looked at silver, and I said silver is rallying its in-leg D. I'm watching this closely because it did 35.79 was the high that we were looking at from October, I think it was, or November last year. And I said the cup formation says it should test. My target was 35.80. and today we went to 35.49. So we haven't quite made it yet, and it's kind of turned down from the high. Has gold turned down now from its high? GC? Yes, it has. So the high was 31.24. It's trading at 31.06 right now. That's going to be very interesting. Larry Pesavento is doing his workshop now, and when I was in briefly, I love to go in because it's, you always learn from other people. He was watching that very closely. I don't remember now exactly whether he had a short position or not, but anyway, that's quite interesting, right? So what we're looking at is now we have to go to the TLT, because the TLT is huge, big spike to the upside. Now, is this the tradition that we used to see for decades and decades until the last 5 years or so, where when the market was tanking, bonds they were considered a safety play, and most of the time, for a little while now, when the market's gone down, bonds have gone down. There was no safety play there. Bonds went together with it, and yields went up. This is the first time I'm seeing that, at least so far, there's kind of a flight to safety in the bonds. That's very interesting, flight to safety. And look, there was a 1-to-1. That's A to B equals C to D. That's different to the Chapman wave notation. And it went just a fraction beyond, and now it's spiked up. A big gap up today. So the TLT is up $1.18 at 90.09. This is the iShares Treasury, a 20-year Treasury bond ETF. So with that said, now I've got a couple of things that I think I've overlooked. Yes. So I had spoken about this for some time. I used a number of CEOs as an example over the years. And one was Benioff, Salesforce CEO, brilliant mind, doing fantastic work. But that chart going from 369 round number high back in 2024 to where it is now, 272, that's a 30-something% decline. That just says to me, I followed him, and it was when it was making this top right here that I said, let's check out. And the building, the wonderful building that they designed in as an edifice to I always say skyscrapers are an edifice to man's ego. So far, it's still man's and not women's, but man's ego. But I had said that this new building, big building that he built, could be a top, and it actually wasn't. But when I was in Sydney, Australia, this is when they built one of the tallest buildings in Sydney, the Salesforce building in 2024. So this is going to be very interesting, because that relationship is a relationship I call it hubris, because that's the relationship that I said I'm seeing now with Musk. And that was way back when I made that peak D, and I said, he always comes, there's always some kind of a news to make a spike to the upside. I just didn't feel that I could have an overnight spike like that for subscribers. They're usually very big. But I said, this is really negative from the 484.54 high of December the 18th, because he's not focused. I don't care what he's doing now. This is a separate subject altogether. He's not focused on Tesla. And therefore, it makes it very vulnerable. Well, I would say 488 down to 217, the recent low, and now it's trading at 264. I would say that that's a pretty severe decline, right? And I don't see an end to it just yet, but isn't that interesting? I mean, this is looking at the market, not through anything else other than what's been said by the person who runs the company, who's the major force in the company, who's lost the focus. And with Benioff, he was writing social books and stuff like that. And I said, that's not so good. All right, so there are other people as well. Don't want to waste time with that. Look at this stock here. I didn't have the courage to put it in today for my subscribers, although it showed up. And I thought, should I do that? In this kind of market, anything can happen. This is Information Services Group, AI-centered tech research and advisory firm. It's been on my list for a little while. It keeps showing up as a screamer in my low-priced, under $10 screener list. And look at this. Today it is up 2.65%. It's up 10 cents at 387. Yeah, it's only it's a couple of dollars. But look at that. Look at that chart. Look at that huge leg D. In 4 weeks, it's gone from the twos, 280 or something, to today's high of 388. I mean, 33% gain at least. Not that we have it, but that's what I'm looking at now. For the next couple of weeks. So you remember I said there's a chance that in March we make some kind of a low. Well, we made a low on the 13th. Let me just go through this again as I'm hearing the music. Let me just show you something I think is very interesting. So we made a low January the 13th. We made a top 31st, and then we came down. And the 13th of March, we made a low, but it's not the low, it's just a low. I'll be back. Dow's down, 580.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry's been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
I've always had a question about Uber. Yeah, I just stay away from Uber right now. It's down $1.38 to $73.48. Not a big deal. It's actually holding pretty darn well. I just be careful of longs at this point, unless you've got very specific areas. That's what I'm going to be going through in my subscriber video, weekend overview video. I'll probably make it after the close today, send it out. And just to say, these are the areas that have held, well, look, even X, which is U.S. Steel. I've loved it as a position, not as a company, just as a position for a while. Didn't get in because this is a complicated situation with the tariffs, but this is one of the only ones that's really benefiting. And even today, it opens at 44.80, goes to 44.87. It's trading right now at 43.34. What is this? So this is leg C, and it's got a big sharp pull, but it's just tough. Right now, you've got to be careful. And there's nothing wrong with having patience, number one. Number two is we'll see whether or not, we've been talking about this since December, that the tech sector was vulnerable and that at some point you're going to have to find other areas that find support. And that's what I'll be talking about this afternoon. How does that work? Where does it go? What's working? What seems to be in the crosshairs of buyers that are out of the regular market? In other words, it could be the commodity sector. Some of the commodities have held very well. That's what I want to be looking at. And all you do is you buy the fund or whatever it is. You don't have to own commodities. You don't have to wait for the front lawn to be having 20 tons of wheat that you bought or whatever, bushels. So be careful. That's what I'm saying. Be careful. Be very selective. I would start to tighten up stuff. There's no reason why you should get out of everything if you had good profits. Take something off, though. Be prudent, because this market now is today was just down 230. At this point, that's okay. But this is a little bit more. It's serious. Stay tuned for Steve Rhodes. Check out my opening call, and I will see you on Monday. Have a great weekend.